Hello and welcome to Carsmansky channel, where I discuss the car market, used car buying, new car buying tips and tricks. And today I wanted to dive into the state of the union of the used and a little bit of new car market as of December 2023. Now, the data I'll be using for this is from Cox Automotive, a highly reputable and detailed analysis firm that provides lots of data on the market. I love to glance in it and see if I can find something interesting. And it definitely has been interesting. I think we're slowly getting out of the slump that we're used to, where there's no new cars, used cars are there for atrocious prices. That's the bottlenecks and the pandemic, that's what it created. We're slowly shifting away to pre-pandemic levels. So, starting off with inventory, an important factor to decide on the prices and overall supply of the cars. If you look at inventory in the market in the US in October, Cox estimates that the used car inventory was at 2.3 million and the new cars were at 2.4 million. So new cars have been steadily rising, but the used car inventory has been steadily rising as well. But what it does tell us is that there are new cars in the market, which means dealers might be a little more interested to offload them. The average price for those new cars was almost at $48,000. It's been steadily rising year after year. That's no surprise. But the used cars have been going down. So right now, an average sales price of a used car is at $26,500. And what's also interesting is that the values of the used cars have been steadily going down. Again, the more supply there is in the market, probably even less demand in the market, the prices are going down. So today, a 3-year-old car, based on its 100% value when you bought it new, is worth 66%. So if you bought a model year 2020 brand new, let's say for $100,000 for simplicity, today it's worth $66,000 on average. Even if you compare it to last year, the same car, 3-year-old, would have been 2019 model year, would have been $73,000. So it's almost a $10,000 decline. We're still not quite at the 2019 level where the same car would be 51% of its original value, but good news, it's been going down and down and down. Kelley Blue Book estimates that by 2026, the 3-year-old cars will be 56,000. So what's interesting though is that as the supply has been going up and up, demand maybe a little bit down, and we're all expecting it to come back to the 2019 level. But what those estimates don't account for is the higher interest rates. So right now, the average interest on a new car purchase is almost at 10%, really high, and much higher than in 2019. Used cars, usually even more, again, depending on the credit score of the person buying it, but generally used rates are higher than the new rates. So what that doesn't account for is that interest rate figure. So what does all mean in terms of the consumer? If you're looking for a used car right now, it would be smarter to buy now than, let's say, last year. If you absolutely need it, I would still go for it. But if I were in a position to buy a used car, I would maybe hold off a little bit longer. I would wait it out for another 4 to 6 months. If it's a new car, I don't think it matters as much. They've been going pretty steady and the dealers have supply now, so there may be some room to play and negotiate, but as of right now, the used car is definitely a better value. Off to you to decide.